Hello and welcome to Money Management. This week we take a look at which investment platforms are leading the charge on advisor service levels. But first, here's your news roundup, brought to you by Securitor. Rural Funds Management Chief David Bryant has called on the government to tighten tax policies and withdraw from its partnership with the agribusiness MIS industry. Bryant described tax-effective managed investment schemes as fundamentally flawed and a significant risk to consumers. Meanwhile, PIS, AFS and a number of other MIS stakeholders have created a lobby group for FEA investors. PIS's Rob Burns, AFS Head of Compliance Mike Butler and others, including advisor David Haynes, are working to salvage value for investors in the failed group. The withdrawal of MIS investors from the market has left surviving companies such as sandalwood producer TFS Corporation seeking institutional investment. Dealer groups are increasingly using model portfolios across their advisor forces while APLs continue to shrink, according to Zenith director David Wright. Wright said many dealer groups are looking for a more uniform approach to portfolio construction by advisors. Meanwhile, Morningstar's Tim Murphy issued a warning over the use of the core satellite investment strategy, saying some advisors are using index funds as a stable core while choosing overly expensive and risky funds for the active portion. Tower Chief Executive Jim Minto continued calls for choice of life insurance providers on investment platforms, saying the existing system restricted competition. Minto made the comments as Tower announced it was undertaking a $96 million capital raising. The move by super funds into the advice space continues, with Lucre of Super granted an AFSL. CEO Greg Sword said the majority of advice on super would be offered for free, while more intricate advice would attract a fee. The Industry Funds Forum has also created a service to make it easier to facilitate rollovers between funds. And John Pereira's listed India equities fund will shut up shop, with Pereira saying he's still bullish on the Indian economy, but the LIC structure had been problematic. Financial advisors and mortgage brokers are aligning their businesses, with Wealthy and Wise Lifestyle Financial Planning looking to offer combined advice and real estate services, and Smartline Personal Mortgage Advisors partnering with Aon Financial Planning and Protection to offer life insurance to their mortgagee clients. Finally, the latest Russell Investments ASX long-term investing report found Australian shares outperformed all other asset classes, including residential property, on an after-tax basis over the past 2 decades. But some, including PIMCO chief John Wilson, believe equities are unlikely to hit the highs of the past decade for some time, potentially making investments such as bonds more attractive. In this week's Money Management, Milana Pokrayats finds the industry has supported calls for higher education standards for advisors, including a degree entry minimum by 2015. We find offshore dealer group conferences are still in vogue. And in our top story, Mike Taylor reports IWF's Pursuit platform has taken the top spot in the Wealth Insights Platform Service Level Survey, breaking a 2-year run by Colonial First State. We spoke with Wealth Insights Managing Director Vanessa McMahon.
So we see that pricing is converging, the platform offerings are converging, and so planners are telling us that now the way for fund managers and platforms to differentiate themselves is in their service offering. And we do see that there are very different levels of service being provided by the platforms. Different advisors value different aspects of the service level. So for some advisors, BDMs are an extremely important part of the mix. For others, it's value for money for the client. And for others, it's the IT and the web functionality of the platform that's become very important in the past few years.
For all the details on those stories, see tomorrow's edition of Money Management. Thank you for joining us, and I'll see you again next week.